All right, so good evening, everybody, once again. Tonight, this session will be pretty long. It'll be for at least 1.5 hours. Because just slides alone, I got 62 slides to introduce to you. And about nearly 55 of them are actually economical charts that you need to know, okay? And if you stay long towards the end, before I go into my technical analysis, okay, I got a slide that it's up to you to decipher what am I trying to explain to you. It's about a movie that I really like. Okay, it's about a movie that I really like. It's not Wolf of Wall Street, it's something else. But just that the four numbers that are going to reflect on the movie is a movie title. These four numbers, right? I felt very the feeling towards it is very different, put it this way. So if you know me good enough and you're my student, you will know that I read a chart from a certain angle. And if you understand where I'm coming from, again, when you look at the movie title, you probably will know what am I trying to say. Okay. All right. So I know there's a bit of craziness here at the moment, but trust me, I'm very excited to share all this thing to you tonight. Okay. So let me just get myself ready. Okay. Let me put up my screens. You know, it's really very exciting today. So much good stuff to share with you guys. Okay, just give me a short moment. Let me get things up ready. Okay. We have about, how many people? Quite a fair bit of people today. Still coming in. Okay. Every Sunday exciting, yeah. I try to make it very exciting for you guys, but tonight is really special. Tonight is really special. Total, I took 6 hours to do this 6 hours MAO. This is my longest MAO ever, okay, in terms of preparation work. Okay, let's just start this evening. Okay, let me start now. Okay, let me just put on my slides. Up we go. Okay, are you able to see my PowerPoint slide? If you can, give me a thumbs up, please. So those who are new today, relax. No need disclaimer yet. I haven't come to that point yet. Okay, thank you so much, guys. Thank you so much for this. Okay, I'm trying to get all my stuff ready. Okay, I need more computers. Okay, so tonight, 29 November 2020. Trade with the Boys Weekend Open MAO. All right, MAO stands for Market Analysis and Outlook. Okay, diet warnings, but would average investors believe? Now, basically, end of the day, thank you so much, Yvonne. All right, thank you so much. Every time when we do MAO, the greatest what do you call appreciation is when things gets correct and people makes money. Now, the hardest and saddest thing is that when we don't get it correct, right, people start to give us a lot of unhappiness. Okay, so all I can say is this, guys. Tonight, my sharing is really based on hard facts and figures as usual. Now, it's up to an individual to make your final decision in the market. But I can tell you this, I'm very, very excited for the next 3 weeks. I repeat, because if you follow my MAO for the last few times, okay, I did tell you that the market will likely move upwards for the equity market by another 3 to 6 weeks. So the equity market have been up for 3 weeks already. We're coming to a midpoint. So this is coming to the 4th week now. And if this is going to continue, it'll be until the 6th week. But if not, then we are near to the point of breaking point. So that's why tonight, there's a lot of things to share with you. But at the end of the day is this, do you believe it or not? I'll leave it to you to decide. But I'll share with you towards the end of the day, what will be my take tonight. Coronavirus global updates. Now, I think I'm the only trainer in Singapore keep on repeating on coronavirus. Now, it's not something that we can't see. It's something that we can see almost every day. And unfortunately, recently, we have the first case again in Singapore, a community outbreak, all right? Hopefully, it just stay there. But the thing is that, is this a problem? It is a problem. And this problem is ongoing, but just that the market is putting it just at the corner, and hopefully the vaccine can assist. Now, gold broke below 1,008, and I have been calling for this for the longest of while already. I believe that probably I'm the only trainer that called for sell the last 3 to 4 weeks. which of course people don't understand why. I say that it's not because I got some information or some back-end information. It's because that when the boys are not buying, right, and the charts are showing weakness, you know that it's a matter of time. So tonight I will show you my personal trading mantra. Yes, tonight I'll show you my 2 trading mantra that I always believe in it. Now it may be like nothing special to some of you, but to me is that if you can understand the real meaning behind it, then probably you will know what am I looking out for December and January 2021. That means that December 2020 and January 2021, I believe that something big is going to happen very soon. All right. So serious dire economic warnings, but what average investor is going to believe. Now tonight, the sharing is going to be very confusing. Why confusing? Because I realized that when I go straight with you guys and tell you this and that, you will like listen to it like a lullaby. So tonight, I purposely, in Singapore colloquial language, we rojak them together to let you understand that actually this whole financial market works in a very interesting way. It's called what I call people. Okay, the market itself is intertwined. So example, if this happened, that will happen. Hence, this will happen. The point is, it's like Newton's third law. All right, basically same idea. Is that right? If you want to play, like you play billiard, you play pool. If you want to hit a certain ball to the certain pocket, but then there's some other ball in between them, you actually hit the other one to make it go to the main ball for it to go to the pocket. So that means that something had to hit something first to come to the other effect. And I'm telling you this as well, right? Bitcoin recent selling, gold recent selling is not by coincidence. It's actually all the alignment is slowly picking up and going towards the point that the boys want. So there will be one more movement coming up soon. And if you can link the dots tonight, you probably can understand where am I driving at. Okay. So of course, as usual, I saw a lot of you already does a lot of disclaimer already. For the rest of people who have not disclaimer yet, can you kindly now do a disclaimer by keying the word disclaimer into the group chat, right? Now, wow, 166 people. Thank you so much, guys. Appreciate that. Now, end of the day is this. Someone asked me this question over the weekend. Kel, do you think gold can buy? I will explain this shortly. Okay. Someone asking me again, Kel, can we short the gold? Can we short Tesla and all this? I will not explain on Tesla, but I'll tell you my direction for the equity market. Okay. Thank you so much, guys. Let us begin. Now, first of all, coronavirus in USA had hit 200,000 in a single day. Will the vaccination be in time? That is a main question. Now, I may explain this to you shortly. Now, we have the latest numbers. I did not update the numbers tonight. This is yesterday's. Right, you can see that very clearly itself, right? We still got 17 million cases are still infected. And the numbers are jumping quite a fair bit, okay? And of course, the good part is that there's 44 million cases that are no longer in the numbers. That is good. That's very happy. But still, the total death is 1.4 million. Now, of course, in US, it's still leading a chart with 13 million, but India is not far away. India, basically from what I'm seeing now, India, another 1 month plus to 2 maximum, India will also cross 10 million people. All right, and the thing is this is not healthy because why? Okay, you can see that though they recover pretty strongly, right? But this is not good for the whole economy itself. But US, as you can see right now, is averaging about 155,000 people falling sick every day. And this is going to be a problem later. Now, basically, you can see from reports itself, right? The last time, November the 4th, which is just only less than 25 days ago, the daily infection was only 100,000, okay? Today is already 155,000 on average. And of course, the last 2 days, it hit 200,000. This is scary. It's multiplying by 2 times in every month. So logically speaking, it's all right. We could hit as much as 250,000 cases per day, even before the vaccination starts. And even the vaccination starts itself, right? I'm so sorry, guys, that it's a process before we receive it itself. So that's why I'll share with more of you today. So South Korea, you can see new cases are topping up the chart, 500 for the 3rd straight day. So you can see, even though a lot of prevention, a lot of, the government tried to protect, right? this is not helping much, put it this way. So please, guys, whether which country you are from listening to me tonight, please put on your mask and keep your social distancing. We are coming to the point of December, January, whereby the winter season is coming in, the rain is coming in. It's not good. And of course, if you believe in other stuff, you should know that, right? December and January is really not a good 2 months to be, catching a cold or fever. All right. So this is from CNN. US is rounding the corner into a calamity. Expert says with COVID-19 cases, death cases projected to double soon. Now this is actually pretty bad. But of course, some people say CNN is always, expectory. They don't really tell you the truth. Well, I leave it to you to decide. But all these are real stuff that's in the market. So you decide on your own. All right. Now, what I want to share with you is this. Now, FAA supports first mass air shipment of COVID-19. Now, this is a very good news. But there is a problem, guys. For the whole thing to go through, the first thing is authorization, which they are forcing it through FDA and FAA. Then they are now manufacturing. Now, usually this manufacturing itself comes from a certain place. But because of really the need for certain thing and protection of the formula, they are now manufacturing through their own company. So it'll take a while for it to come to the billions of vaccines that are needed. But the serious problem is the distribution. Now, this distribution problem is, number one, if it reaches us, example, do you think that you will go to take the jab? Number one question. Number two, all right, after the jab, right, you know that based on what you are seeing now, you need to at least 2 jabs for it to really be there. So the question is, how many people can afford the jab? Second of all, right, even the first jab go in, right, would you be even there to do that? I believe that the world will take I see you, you see me look first, all right? So the people who are sick, obviously they'll try first. And the people who are in the front line, they will have it first. But the question is, if there's any negative reaction by any individuals, this is going to put everybody back on hold again. So that's why I say that even this vaccination comes out, right, there will be a problem in the distribution curve for it to reach everybody. So guys, this will take a while, 3 months to 6 months. It will take a while. You may say, I will not take it unless it's mandatory. All right, like I say, guys, you should know my point, guys. It's not that simple as what the market sees it to be, all right? So we are seeing pretty clearly that the hospitalization surges across the US and people are really the hospitals running out of these beds, and the workers, the frontline workers, I really salute you. I know some of my students are actually the frontline workers. I totally salute you tonight. Thank you for doing all the hard work, and know that you guys are cutting off your leaves because you're preparing for this bigger problem coming in this December period. I really salute you guys. Now, the thing is, this undeniable is our ICU is at full capacity and there's not enough health worker to go around. And this is going across the whole world. It's not just only US, it's across the whole world. So think about this. We are now, going to stay at home because of the winter period or rainy season. All right. But then again, these people are suffering outside. And if numbers keep on multiplying, going upwards, right, you should know like what the feel is. It's going to be very damaging, because why? People can't stay at home for too long. They need to get out. And if they cannot get out or, vent their energy, things are going to be bad, right? So Dr. Fauci says that Thanksgiving may be the start of a dark holiday season if the COVID-19 cases continue to soar. Now, even himself tell his children not to come and visit him during Thanksgiving. And he says that he will skip also Christmas himself. Now, if a doctor tell you to relax and don't even do that, I don't see why everybody's going out to do all that stuff. Now, I honestly, today I went out with my kids. I tell my kids, look, no matter how, put on your mask. No matter how it is, we got to go playground, get the sun, but still put on your mask. And this is something that we have to be responsible as parents too. So of course, the flip side is that because of that, right, Black Friday was a big stunner, because why everybody stay at home to buy stuff. That's good. That's good. That's a very good step. So that's why technology companies will do well as long as they do that. But not every company, not every shops, they have the knowledge to go into online. So that means that there will be even more companies, more shops bankrupting. All right, if they cannot go into time, they could not turn into e-commerce, then they will suffer. So that's why, again, there's always two sides of a coin. But nonetheless itself, in Singapore, we just have our first locally transmitted case, COVID case. And unfortunately, 160-year-old man passed on because of complication. Now, this is again reminding us that it is not over yet. It's still ongoing, and we are seeing the live part, because during the July, August, September, October month, we were pretty okay, and seemingly the thing reduces. But we all know that the doctors have said, the experts have said, by November, December, January, the thing will come back, and it is coming back. So please, guys, for those working outside, please make sure to be careful. All right. So this is all on the COVID side, but would that mean a problem to us? Of course it will. Let me explain this to you. Why is that so? But because, once again, let me ask everybody tonight, as usual, I always ask this. Are you bullish or are you bearish with the equity market? If you're bullish, keep bull. If you're bearish, keep bear. Okay, bullish or bearish? Let's take a look now. We have more bear tonight. Some bull coming up. Again, some bearish. Okay, bullish climbing up again. All right. So it seems that we have a bit of bearish and bullish on both sides today, but a little bit skewed to the left side, which is the bearish side. Okay. Now, tonight, I will show you the reason for why to be bullish and why to be bearish. Okay. I'll show you both sides. And you make your final decision on your own. Okay. Now, let's go first. Now, this is late Sir John Templeton. Bulls market are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Now, where do you think we are now? Are we at the optimism or are we at the euphoria? Come on, key your answer right now. Which part are we in? Okay, we have Leroy, optimism. Colin, optimism. Carl, optimism. Sally, what's pessimism? Super euphoria by Chelsea. Okay. All right, I can see most of your writing is optimism. Most of your write optimism. Now, if you ask me where are we now, right? Yeah, we are between optimism and euphoria, in my opinion. Now, why optimism? Because apparently everybody is looking forward. Fantasy world. Okay, Joseph, thank you. All right, the thing is this. Why do I say optimism? Because you can see people now is optimistic of coming 2021. People believe that the vaccine will help the market, and that's why the stock market is going higher. That's true. Now, why I say euphoria? Now, being a trader for 20 years, right? Whenever I see people making good money, and these people are really from all walks of life. Example, the housewife, the common 9 to 5, even these yuppies, for example, they are making money easily from the market, right? And I recently saw the stock market, all the penny counters are running out, right? I was telling a good friend of mine, a good brother, I said that, brother, this is the thing. When the last time in the March, April, May, July recovery, we don't see this thing. Today, we are seeing all the penny counters going up like mad. And this counter got no valuation, but people just buying. And everybody just buy and buy and buy non-stop. And you can see the stock forum in the market is so many now. Every forum call for buy this, buy that. And you know that the share really worth 5 cents is worth 30 cents today. So you can see this is called euphoria. So optimism to euphoria, in my opinion, that is where we are. But I realized that there's actually another angle of looking at this. Apparently this guy, I don't really like him, honestly, because of what he done. But nonetheless, I like his quote. Bear markets are born on euphoria, grow on grinding economics, mature on recession, and die on panic. Now, let me explain this to you, right? So he is saying that, right, when the market is at the euphoria side, bear market will start to surface, meaning market selling will come in. Then after that itself, the economy starts to become very bad. And that is where it grows on it by feeding on it. Then after that, the market hit recession because that is whereby the market economic collapse and it mature within everyone around us calling for sell. And when people really panic, like selling things for like, if worth $1, they sell it for 10 cents, that is called panic. All right. So we are now actually on this between them itself, right? Billionaire, on that itself. Wow, Chloe, you say that my taxi friend asked me to buy how to buy Tesla. He never bought a US share before. Oh my goodness. Thank you, Chloe. This is really outstanding stuff. Let me just screen this down. Okay. Oh my God. Okay. But this is really, really ongoing, my friends. It's really ongoing. Oh, sorry. Okay. This is really ongoing. This is why I've been telling people that be very, very careful. We are actually on something that we have never seen before. All right. Just give me a short moment. Let me just print screen this. I think tonight's sharing will be incredible. But as I mentioned earlier, for those who just joined us today, remember today the MAO will be a little bit longer than usual because there's so much thing to share tonight. I have so much to share tonight. Okay. All right. The thing is this: why are we having this big bull market? Of course, we have the stimulus package. We have this. Right, these stimulus packages, all the monetary policy is the main driver of this. It's a Fed-driven package, okay? Because of that, we have QE infinity, meaning, right, there's no stopping here. The Federal Reserve, the pump and pump and pump and pump. There's going to stop there. The repo commitment. Now, despite the banks are supposed to help each other, but they're not helping. So they need the Fed again. So again, as long as Federal keep on doing the monetary policies, QE infinity and repo commitment, there's no way this stock market is going to go down. I can guarantee you this, no way it will go down, okay? Yes, indeed, Eric, people are buying penny counters already. Yes, uncle, aunties are buying. It's very similar like 2007. It's very similar. And of course, when all this is happening, right, all the countries are now in extreme deficit, extreme. Yes, and because they are really basically putting all the money they have, scrapping the cut to the bottom, just paid out. So this is what is going on. So sorry, but the bear traders, you will not be able to see a market crash too soon, unless not a financial calamity. You won't have, because why? With the money pumping like this, there's no way that we'll see a financial calamity, unless the financial word remove away. That means a calamity on its own, whether it's natural or because of some people's doing, that will basically prick that bubble and burst everything. I repeat one more time for tonight. It's either a natural disaster or calamity that hits somewhere in the world that causes things to break, to burst, or some doing by human being. All right, something. All right, you should know what I'm trying to say. If that happened itself, that is it. Okay. So I cannot tell you when or what, but that will be the only one, because financial side, sorry, there's no other companies will be going down as long Federal Reserve are pumping money. No way. Okay, no way. So what we saw in 2007, we saw this thing. We had the GDP numbers versus the Wilshire total market cap. So we can see very clearly the time when there's a slight dip back here when the GDP numbers drop. But prior to that, the stock market already corrected on its own, and obviously this red thing called is a recession period. Now we are in recession period based on GDP numbers. We are also showing a very clear downward drive on the GDP, but very interesting, the stock market is at all-time high. So that tells you this is completely decoupled by everything. Well, Yvonne, I will not say that COVID, if COVID itself, right, is the punch, well, we don't see the impact at the moment now. So it will be something even bigger than that. All right, so why are we having this? Because I told you again, we have this stimulus, QE, and repo, right? It's not stopping, and it won't stop at all. It won't stop at all. So the financial economy divergence versus the real economy is actually ongoing. Since 1970s until today, you never see a point whereby GDP goes down and the stock market goes up. So as long as you are my era, since 1970 to today, the last 41 years, we have never seen thing like this. So that's why a lot of hedge fund bankrupt, a lot of hedge fund wind up, a lot of people not making money because this is not going logical. So the thing is this, when people, there's no logic, right, based on history, when things are not logical, right, then you need something, a catalyst to basically bring back to logic again. So it will be a shock. Yeah, it will be a sudden shock out of nowhere. It could be like midnight, something happened, boom, it just hit us in the middle of the night, and things happen, and the whole thing just collapsed. You get my point? All right, it's something along that direction already. That's why today MAO itself, right, is going to be quite interesting. So you are not long in stocks anymore, my friend. When you buy shares, you're not buying Tesla, you're not buying Microsoft, you're not buying Amazon, you're not buying really, you're not buying the company, you're buying on one thing, you're buying on the Federal Reserve. As long as the Federal Reserve keep on putting money into the system, as long as you are bear, you better run. If you're a bull, you just ride. That is a point. As long as they do it, they keep pumping, they keep printing, you're going to make money. So that's why a lot of bears have been asking me, Kel, the market is supposed to sell. How come it cannot come down? I say, look, if you are a lousy businessman, you cannot do business at all. Anything you do in business always fail. But before you fail, your father, the rich daddy called Federal Reserve, come out and save your ass. How much you owe? He draw the check and give triple to that person. I put it this way: if imagine this, I do a business with you, right? And you owe me $2 million. But then before I can sue you in court, your daddy give me $10 million. Come on, man. If I'll tell you that your son is good, I'll say that for $10 million. You understand my point? This is the real stuff that's ongoing. So is this because that the Federal Reserve is rich? You are wrong. You're very wrong, my friends. Whatever Federal Reserve print every moment, the Americans are paying the dues. You think about this, it's just taking paper, put with toner, print, cut, and give out. Now, how much the cost involved on one piece of paper? Now, the denomination on it itself is printed, which means $1, $5, $20, or $100 is just a number. But of course, I'll print $100. Why? Because that is where the full value is. So if my cost of this paper is only 30 cents, and I sell you for $100, right, for the full value of it, that means I make $99.70 off your hand for every one piece of dollar I print. I mean, one piece of currency I print for you. You think about this. And of course, no one dares to go against US, by the way. No one dares. So my point is, guys, the problem is this. The stock market will keep on going higher. It will. Until that punch comes in. And when that punch comes in, guys, run. Head for the hills. Because you know why? That is the catalyst that the whole world is waiting for. So take my word for this. I don't know what will happen later on again, but just remember what I say tonight. So let's recap what happened in Japan stock market, okay? Now, back then in 1990s, the Japanese economy suffered a prolonged recession that followed the collapse of the favorable economic bubble in 1980s. Interesting, 10 years it took, okay? This stretch of economic stagnation or the lost decade ended only in 2002, okay? So it suffered for 12 years. So end of the day is this, what happened to the market, okay? The market also went up parabolic. It's exactly what we see today in US stock market. And then after that, at the highest point, it just reverse course and come off. Now the government do the QE, the government bought all the stocks, the government do the ETF, they bought the bonds, and in fact, they bought all the JGBs, which is the Japanese government bond, 60 to 80% today. So what does it show you? You can do all you want. You can do all the manipulation all you want. But end of the day is, one day, this will happen. So I'm showing you this. Is it a prelude of what will happen in US market? I cannot doubt this. Honestly, I cannot doubt this. So guys, be extremely careful because we have seen this before happening in 1990 in the Japanese stock market. Of course, again, you may say, Kel, it's different thing. Like I say, I'm just showing you a form of explanation here itself. So what did the Federal did? You can see in 2005, they pushed up the interest rate all the way up to 5.5%. Then in 2008, where the start of the Lehman crisis, they know the problem is there. They start to cut and cut and cut and cut. And because they cut down to almost zero, finally the market realized that, okay, guys, it's cheap to borrow money. Now the market finally came down to a good value. They start to recover. And of course, after 6 years to 7 years of low interest rate, well, everybody got happy. The bull recovered. We returned back to normal. So on the 2016, whereby they start to increase interest rate, right, with Donald Trump coming in, he was totally against this. And of course, he got what he wanted. The dollar came, he wanted a weakened dollar. He wanted the interest rate to be low. He knows that that will help. And of course, Federal Reserve began to cut the interest rate. Now, of course, we are back down to the same point once again. But there's a problem, guys. There's a very big problem. You know what's the problem? Yeah. You know, at this time itself, right, the US Dow Jones is 6,650. We are now at where, my friend? We're at 30,000. My goodness, do you see a difference there? The problem that we are having now. This is crazy, my friends. When you are interest rate, when the market interest rate is very low and your price is very cheap, you get the rally. Of course, it's valuable and it's desirable to buy stocks. But at 30,000, where interest is low, unless you're telling me you're aiming for 32,000, okay, that's fine, or even 40,000. But the question is, does it make any sense? Now, can the Federal Reserve cut rate further? Well, honestly, they can't, and they will never do the negative interest rate. It will kill the bank instantly. So they will never do a negative interest rate. Then how? To me, it's a matter of time. They will hike interest rate. But the thing is that how can they hike interest rate? It's impossible. The word is inflation. Inflation. Now, how can there be inflation when they are saying a CPI numbers is never into that? Now, Federal Reserve never use CPI as a form of a guidance. They are using something else, another metrics. I forgot the name. Apology. If you know that, please key in the group chat. All right. They use another metrics to calculate inflation. Hence, therefore, to them, there's no inflation. There's no inflation. So it's only when the stock market go beyond craziness, euphoria comes in, housing prices go crazy. Phillips curve, all right, correct, Victor, one of them, correct. Thank you so much, Victor. All right, the thing is this, only when inflation comes in, then they will be forced to no choice to really, what do you call it, make their words come into play. But the question is, will they do that? Why not? With the Dow at 30,000 itself, that gives them ample reason to now basically hike interest rate when they are forced to do that. Again, how they do that again? They will look at the numbers. No, now the housing prices are going up. This is a very good excuse to start doing that. All right, stock market at a high, good excuse doing that. Economy recovery, optimism is ongoing. It's good time to do that. So question thing is, guys, you've been asking me about gold, right? So I said today, MAO is going to be a bit of jumping around now. Gold and inflation goes hand in hand. Over the last 100 years, inflation and gold price is the same direction. So if inflation is going to go up, gold will go up. So watch inflation carefully. If there's any signs of inflation, gold will go up. But you may ask, Kel, but the interest rate, if it goes up, right, the dollar will strengthen and gold how to go up, right? That is where it gets confusing. Totally, I understand that. That's why today, the more I explain, the more confused you will get. But that is how the world works itself. Yes. So tonight, it's going to be interesting. That's why I say, okay? Yes, logically it's all right. Interest rate goes up, the dollar goes up, gold will come down. But let me explain to you again. Today, you can see the interest rate today is at 0, but the Dow Jones is not 6,600. It's at 30,000. The whole thing is already distorted. So there will be a point whereby all the fundamental that you know will not work anymore. Yes, it will not work anymore. It will go a total chaos. We're probably going to go to a chaotic next 6 months if you trust what I'm going to say. So PCE, correct. That's the one I'm looking at. Personal consumption expenditure, correct. PCE, the one that this Federal Reserve prefer to that, which is totally ridiculously stupid. Okay, thank you so much, Peter. Jimmy, sorry for doing that itself. Okay, thank you so much. So this is something I'll show you guys about big boys. Okay, now Stanley Dragon Miller is the understudy of George Soros. We all know that, right? So this is a clip that I pull back from the past. Basically, he says this to the correspondents on the night. All right, he's saying that, right, the market is crazy, it's a maniac, it's a raging bull. But do you notice that the Dow that time is only 27,500? Today, the Dow Jones is at 30,000. Today, the Dow Jones at 30,000. This interview was done about 2 months ago, about there. And Stanley Dragon Miller already at the time said that the market is really crazy at a high level. But if you follow through, you will realize that at the time the Dow was only 27,500. And he did say this on CNBC. This stock market is in an absolute raging mania. All right. But again, the Dow Jones didn't stop there. The Dow Jones continued to rally to 30,000. So in short itself, right, even the big boys can be totally wrong in this stock market condition. Right. This is the second guy below George Soros in fact. Right. Basically, he's an understudy, one of the mostly his prize student. So guys, that's why I say even the boys can do whatever. You need to follow the market. So this is the article that was September the 9th. Basically, I managed to pull back for you. Now, why I want to show you that? Because I'll tell you about how the boys play this game. So today, the Dow Jones at 30,000. Okay, now the moment when he called for that back then itself, the stock market did come down a little bit. But after a while later, the market resumed its bullishness and went up to 30,000. So that's why I say, if you just basically jump in on what Stanley Druckenmiller says, you are caught again. So believe in yourself, believe in the market, make your own decision. Okay, that will be the best. All right. So while are we concerned? Now, whether you like this or not, I showed this previously. The last time I showed this was here. That was in last year, December, when I show you the Shiller P index was at 33. That time, the Shiller index was at 33. I came on this MAO weekend. I said that we are near a problem, but I cannot tell you what's the problem because seriously, there's no problem, right? Then after that, what happened? In December, we saw China coming out the news of this COVID, but no one take a bother about this. January, the punch came in. February, the market collapsed. So I repeat myself. The world has a very interesting way to remind everybody that when it's high, get out. But they will have different ways to tell you certain things. But the ultimatum is the history and pattern will never change. So I repeat one more time for everybody's sake. Back then, when it was 33, all right, that was in this December, whereby I mentioned this. The market was like, no way, the Dow should go higher. And after that, the market crashed 8,000 points from the very point there. Now we are back to 31.42. This one is a bit delayed. So I believe today is 32 already. So we are just only 1 point away from the last time it hit 33 before it collapsed. Okay, now do note Black Tuesday is a highlight I want to bring it to you for tonight. Black Tuesday happened in 1929, okay? And at the time, the Shiller P index hit only 30. When it hit 30 already, the market collapsed. So the question is now we're at 31. Are we near that level? Maybe, all right? Let me explain to you more about this Shiller P index and this Black Tuesday for you to understand this better. Now, in October 1929, okay, this Black Tuesday hit Wall Street. Of course, at the time, 16 million shares is a big thing already. Now it's billions of shares, okay? Now, of course, I'm not going to go into detail to bore you, but I got something to explain this to you. Now, in that time itself, right, there were wild speculation during the Roaring 20s, and the production had become declined, which is exactly the same thing now in 2020, okay? Unemployment has risen, same thing in 2020, leaving stock in great excess of the real value 2020. Among the other causes of stock market in 1929 was low wages 2020, the proliferation of debt 2020, a struggling of agriculture sector 2020, and excess of large bank loans that couldn't be liquidated 2020. You know what I'm trying to say now? It's the same exact problems that created the 1929 stock market crisis. Exactly the same. And this is actually taken from Wikipedia. All right, but there is something you must be happy with honor. The thing is this, there's a question here, honor. Stock prices began to decline in September. Then by early October 1929, October 18, well, the panic set in. A record numbers of shares were traded. Then after that, the market did a dead cat rebound. Then the market poured down with an extremity of more volume of shares coming down. So the key word is this. There will be a day whereby the stock market will come down very hard. The volume will be more than normal average, first clue. Then the second clue is the market will do a technical rebound, which eases people's thinking that that is still okay. But on the third to fourth day, they will go into a free fall where the volume will go beyond normal. All right, that is where you better run. So dear all right, this is something that haven't happened before. And I'll now show you the volume in short while. Let me read what Kelzar have mentioned. Kel, if the stock market collapse, gold will collapse, right, due to margin call before reverse buyers. So it's better to wait for gold to buy when equity market collapse. Yes, indeed. Yes, correct. Kelzar, you're totally right. That's why I'm going to share more with you on gold shortly later. All right. So the thing is this is what I plugged out for you recently. All right. Okay. Now I know some of the trainers outside, they teach us this when the volume increases, all right, in a market downdraft, okay, you do actually see buying opportunity. Some will see a selling opportunity, you know, vice versa. But the point on stress is this: every time when the stock market comes down, we can see that the volume will hit 2 billion rather easily. Okay. The last time when this happened during the COVID period, this is whereby you can see the volume surpassed the normal volume. So where are we now? We are still very far away from that. So there's no pass of panic yet. So which means that now, as long as the day when the stock market comes down, or the stock market don't come down, but the volume keep on running up and surpass the normal point of reversal, be very careful. That day will be that day. I mean, that day, that moment when this happened will really call for it itself. Okay, so that's why now we are still at a very safe stage here. Okay, very safe. So don't worry, don't press the panic button yet. Huh? Okay, now the other thing is that you notice that some companies in US are actually going to renew dividend payout. Yes, dividend. I mean, that means that they are very optimistic. They believe that things will be good. All right. So again, all this of optimism is telling you that the market is really, going forward. So that's why I say we are at the optimism period, not at the euphoria yet. Okay. But the thing is this, with that, we are also seeing the big tech companies fully recovered from the pandemic, and they are reporting record earnings already. So you think about this, easy money, optimism, which leads to potential dividends payout, then followed by this record earnings. So all this tells you that the market basically is in a very good position. So that's why I repeat, there's no way the stock market will crash, not yet, until a punch in the face from something that is beyond financial. All clear on that? If you're key, please key number 1 in the group chat to see whether you're still around me while I do something here. Thank you, guys. Tonight, again, I repeat, the sharing will be very long. Wow, 211 people. Thank you, guys. It'll be very long. So if you are getting tired, you can watch a replay later. All right, tomorrow morning now, put it this way. But of course, if you can stay on, right, you will want to stay on because there's a lot of things to share with you as we go on today. Okay, thank you so much, guys. Continue then. Okay. So the thing is this, the bond ludicrousy hyper bubble. Yes. You know why? You realize that, right? We only focus on the US interest rate at the low. But do you know that bond price and interest rate goes opposite direction? Which means that if the bond prices are, the bond yields are at the lower, the yields are at the low point, then obviously the bond price with a high point, right? But you realize that the mainstream media never cover on the bond prices. They don't cover at all. They only tell you that the bill is low and low, right? So FYI, do you know that, right? Charting it back to 5,000 years, years before Christ, apparently it's right. This is the lowest of all. Let me explain this to you. Basically, it's right. If you're talking about really 3000 BC, okay, and this is not from me, no, this is really from Merrill Lynch, okay, all right, it's not made up by me. Apparently, it's right. The history of interest rate, if they go back all the way to 3000 years BC until today, we are now at a record all-time level. The last time we saw this was in 1929 to 1930. The last time we saw this was 1929 and 1930. And we know what happened to the stock market at that point. But the problem is now we are at this same point, our stock market is at all-time high. You see the difference there? The problem is when things comes down, valuation comes down, stock market comes down, we can understand. Then you can buy cheap. But the problem is that our stock market is at a record high level. So somewhere have to give way. And when that give way, right, this is going to fall very fast. So the thing is this, we can see that now all the point of the chart tells you that, right, we are now at really historical level, 5,000 years history level, okay? And the thing is, we can see the absolute reason why, because the global inflow of global stocks, the inflow has all-time high level, which means that now, right, the global equity market, because of the inflow to the market itself, is at all-time high. Hence, therefore, right, we can understand why the stock market is at that level. So the question I want to ask is this. If everybody is buying, who is selling? That's all. I know that it sounds very crazy. It doesn't sound any sense to anybody here, but I'm telling you this as a trader for so many years. When you are at all-time high, right? The reason why it's called all-time high is because when the market pulls back from here, that is all-time high. Number two, All stock market crash is after all-time high. Tell me you don't know about this, okay? Number 3, if everybody is buying, who is selling? Because every transaction is a buyer and a seller. Don't tell me that I buy, I sell, I buy, I sell, I buy, I sell. Yes, someone has to liquidate. So who are these people liquidating? Now you think back something here. Who the hell has been telling you to buy gold recently? Who has been telling you to buy gold recently, right, at whatever price you back then, and tell you that gold will go to 2,005, 3,000, 3.5, 5,000. Think back for a moment. Who tell you all this? Then you understand why today gold is 1,008 today. This is just a prelude to the stock market. It's the same thing. It's never have changed at all. So guys, now the stock market called the Dow Jones is at all-time high level. It had broke above the pandemic point. So you are telling me yourself now with 13 million people falling sick, we are all-time high. So are you telling me that because they will recover through the vaccine, we'll hit 40,000? Mathematically, very possible. But the question is, what if it doesn't? Then all this will disappear. I tell you this, all this will disappear. Now, let me show you one thing very scary here. Don't mind, just share this tonight. Do you notice that this is a weekly chart? Okay. This is the market that climbs back then. Okay. Now, every week, the market go up by 100 to 200 points, right? Every day, every week, the market go up slowly. Do you know that in a single day of the pandemic, right, when this thing happened, how many weeks will wipe out? All the gains. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. About 20 weeks of upside. In one single week, the market collapsed. So now, back then, we have 0 case in USA. Today, we have 13 million in USA. If anything was to happen again, I'm so sorry. This black bar down will be longer than this one here itself. I repeat one more time. This next black bar down will be longer than the one we saw back in February. Yes, it will be much bigger than that. Now, don't quote me. I'm not saying tomorrow will happen, but I'm just telling you most likely it will. Then again, this will be the next week, following week, whereby the market will try to do a dead cat rebound. Then after that, the market will go into a collapse stage. All right. Now, of course, will the Federal Reserve come in again with another $3 trillion to save the economy? Most likely they will. Most likely they will. But then again, will they do it immediately? That's another thing again. All right. Thank you, Mohammed. Yes, indeed, the news media and Brian. Yes, the CEOs, in my opinion, are selling in the market. So that's why you can see the insiders are selling non-stop. Now, again, I do not want to create chart out of nowhere. I purposely go right in, go and scan through everyone, every market. And then I actually copied a lot from these YouTubers. Okay, that's why I don't do YouTube. I only do video, but I don't want people to pay money for that because I took that information from them, okay, from those YouTubers to do the great work itself. But unreliable, they're everywhere, right? So I basically collate them, compile, and give it to you tonight. So from Bloomberg, the source tells you that the insiders are selling at all-time level. Hey, wait a minute. If these insiders are selling at all-time level, how come the stock market is at the top? So that's where the equation comes in. If the insiders are selling, but the stock market is at an all-time high level, then someone must be the idiot buying shares. But how can they be idiot, right? Oh, once we know the market is at high value. All right, so unless people who are first time playing stock market, they don't know about the high valuation, then probably they are caught now at this point here. Or they are making money, who knows? Or second person who are what we call the idiots are actually the Federal Reserve. Now you may ask, how come Federal Reserve want to do this? Are they stupid? No, repeat that one more time. They are not stupid. They are just passing the debt to the Americans. They are passing the debt to the whole world. They just print. So I don't care on the day what happened. If the economy collapse, right, I'm not going to do anything else. Let the whole market collapse all the way. And forever, you're my slave because you're going to pay me all the debts that you take from me today, all the credits. So that's why you understand sometimes in casino, Why, when a gambler is losing money, why the casino will still give credits to the gambler? On one pretext to give them a chance to recover back. But we all know that, right? It's actually to drive them down to the very grave. Because forever now, just interest alone, that guy who lose money, right, through gambling will pay all through his nose already. So that is a very crazy game, but no one force you. Repeat, whenever the stock market crash one time, right, the market will not say Federal Reserve is wrong. They'll say that thank you, Federal Reserve, so safety my ass again. Okay, so guys, take a look at this. Okay, all-time level now for last 2 years. So this is something that you don't really see in mainstream media. Apparently, it's right. The entire float of US dollars that's in the world, 21% are printed in 2020 alone. That means, right, the entire world US dollar, 1/5 of it, right, were printed all in 2020 alone. Now the question comes in, Kel, how come the US dollar printed so much and the gold price comes down? Doesn't make sense, right? No, it makes sense. Explain this to you. Gold price was 1,500 before they printed. After that, when they started to print, gold price went to 2,000, right? So the gold price went up by almost 33% from 1,005. So you cannot say that it didn't go up, it went up. But the problem is after that itself, right? Okay, the back part euphoria was because people talking about the vaccine not coming out and stuff, and that's why gold push up. Now recently it's all right, the US Federal Reserve are still printing money, but not as much. And because of the vaccine news itself, people are now telling me, okay, fine. But you look at from one point of view is this. Who has the power to sell so much gold suddenly? Think about it for a moment. Who has the power to sell gold down and to this state itself? Number two, why would they want to bring the price of gold to this stage here? Why? Number three, if the money they have sold off from gold to go to somewhere else itself, where the money go? We didn't see Bitcoin going up. We didn't see stock market going up. Then where did the money go? So all I can tell you is this itself, right? The money just went back to someone. And this somebody is just waiting to do one thing. When markets sell down with volume, buyers is on the other side. So which means that somebody have purposely bring down gold to a very good price for some people to buy as much as they can while they prepare for the U-turn to repeat. Which means that something has to drop for gold to go up again. You understand? Because if I want to bring the market higher and give people the benefit, the rich people the benefit, I must give them good value, right? Right? You understand my point? That's why the media have been calling for buying on gold and the price don't go up, right? I just know that something is very wrong already. So did the Federal Reserve been pumping money? Yes, they did. They did pump, but not a lot. It's not a lot. It's just another few billion dollars. So really, somewhere is wrong already. This whole equation somewhere is very wrong. All right. Normally, what we saw is stock market goes up, gold price comes down. We understand this, but not this time around. Somewhere in this whole equation is totally wrong. So you have to open your eyes to watch out for something big going to happen soon. The US dollar is very clear. Since June itself, you can tell me maybe the dollar recover. No, this is the latest update. I got it at 27 November, which is 2 days ago. The US dollar had been coming down. Yes, the US dollar did not strengthen. The US dollar actually continued to weaken the last few days. So that means that the gold selling doesn't make any sense anymore. Someone is controlling the market. Someone knows something big is going to happen. Someone wants to press the gold price down so that it will benefit their band of friends. And that is what I'm saying. Something is about to happen pretty soon, okay? Now, of course, you may say, Kel, what is something? I think you should know what I'm driving at, okay? Even though that my channel is not on media, but I don't want to take the risk here. You should know what am I driving at, okay? So the thing is this, as economy struggle, Federal Reserve way boosting bond purchases. They're still going to print, they're going to buy, they're going to stop. They won't be stopping, my friend. They won't stop, right? Because you see, 2 days, 3 days ago, Federal Reserve way in adjusting bond purchases to provide more help to economy fairly soon, the minutes shows. So what does the minute show? The FOMC minutes tell you that, right? They will come in regardless. So now the thing is this, you think back. Okay, gold price came off so much. Equity market is still at a high. they will provide any means anytime necessary. So which means that the dollar will still go down one more time when they print again. So if you believe in this, all right, and not being distorted by recently the dollar comes down and the gold comes down, right? You get this thing get twisted in between, right? And you may miss the next ride. The next ride, we will see the dollar going down further and the gold price may also go up again. And when that happens itself, because of the dollar weakens so much, inflation will hit the roof. That's why the gold will move up together. You understand? So there will be a point whereby interest rate and gold price and the dollar will be all together in a big rojak and they'll move in their way. You understand my point? So that's why, to me, itself, buying gold is a good thing to do, but you don't need to go in right now with heavy quantity. Slowly. You have all the time in the world. All right? And when this whole thing comes together in play, the gold price will shoot up so fast that you will not be able to catch it if you miss it. All right, this is my first thing for tonight. Okay, so why are we saying that itself? Because think about this: since 2019, the Schiller City Composite, which is a home price index, has went back to a high of 2018. That is beyond pandemic time. I repeat, it went beyond pandemic time. So with this back to the same level, what does it inform us? That tells you that the US home prices are going up on strong demand, low interest rates. You know, the thing is this: low interest rate, we understand. Strong demand, okay, okay. Only thing is this: because you think about this, if I'm American, okay, or I'm an investor overseas, and I know that you're going to print in more dollar, all right, and your interest rate is zero, of course, I will borrow as much money as possible from you, central bank. And because the US dollar is going to go down in prices, which means that, right, 2 years to 10 years later, right, if your US dollar depreciate further by 10 to 20%, I only need to pay you 10 to 20% lower than what I borrow from you today. Because the interest rate now is the same, correct? Now, if you pick this rate at this level now, that means, for example, that what happened in China previously, when China loaned money through the bond to America, what America did was that they cut the interest rate and then they depreciate the dollar. So the Chinese was pissed off. I lend you 1 trillion, you pay me back $800 billion because you devalued your currency by 20%. You understand my point? So even though you give me a 5% interest, but you devalue 20%, you still make money out of it. And this is going to be the problem. And that's why a lot of houses are being bought based on that particular understanding. So why? And of course, if houses are buying up and the price is going back to 2018, a healthy time, so obviously inflation is going to be around the corner already. Inflation is going to be around the corner. So what you can see right here itself is very interesting. The real GDP growth is hitting the downside to -15, but the nominal residential real estate price growth and the residential real estate valuation estimate is going through the roof. It's even higher than 2008. Oh my God, better than Lehman Brothers time. So the stock market is coming up to all-time high. The GDP is all-time, on the way of last 20 years low, but the real estate valuation is at high level. My God, this is really the most distorted thing ever happened. And of course, when this thing happened, a diversion like this, you know, what will happen is if the stock market one day really came off, all right? And there's no way they can save it. Everything will collapse at the same time. At the same time. Yes, at the same time, because you're talking about such an incredible divergence. Think about this: if the stock market comes down, okay, people will have to liquidate as anything as possible. So which one to liquidate first? Yeah, their house, because now it's a high valuation. So if they liquidate their house, what happened? The bank, they won't pay. The bank will become crazy. The bank will go bankrupt. Yes. Now, I'm not scaring any individual here, but we have to be honest to ourselves. This is going to be the craziest 2-3 years we're going to have in the world. Craziest. All right. And that's the reason why, to me, it's all right. Even every Sunday, I'm so tired. I think I need to send this message to you guys. I'm not calling for the sell yet, but I'm telling you to be very, very careful already. You are not going to be healthy. Okay. So this is my first trading mantra that I always believe in myself. When everyone is buying, the market goes up, you follow. But when everyone is still buying, the market don't move, which is actually now, consider walking over to the other side. All right, to the other side, which means that, right, when the market is bullish and the market is buying up, the price is still surging, continue to buy with them. Don't stop because you want to buy with them. But when the market continue to buy, your friends are buying, and you realize, hey, how come this share doesn't go anymore, right? That means someone is selling already. And this someone that is selling means that, right, the opposite is going to happen very soon. You must consider walking to the other side. Got my point? If you understand what I just said itself, please key 1, 2 into the group chat. 1, 2 into the group chat. Thank you so much, guys. Now, tonight is going to be a very long night. So if you are very tired, just take your rest. It's okay. If not, right, you go to 11 o'clock. Okay. Now, this is where I got from Northman Trader. All right, Northman Trader. Okay. What's the telltale sign that the market don't move anymore? Very simple. Look at the chart. The moment you see dojis on your chart, daily chart, you see candles, they're doing reversal hammers, evening stars. These are all the typical signs of market don't move, meaning it doesn't go up anymore. The volume still increasing, but the share price doesn't go up further than normal. That is called don't move already. Okay, Wilson? All right. Now, this is from Northman Trader, one of the very outstanding technicians that I always trust his charts. Now, let me explain this to you. This is called a put-call ratio, okay? Put-call ratio basically is the one here. Now, the put-call ratio, the word put-call, meaning put versus call. Now, the put-call ratio has hit all-time low since 2003. So, the last 17 years, the put-call ratio is at the all-time low level. Now, this is whereby I'm informing you we're at the optimism / euphoric level. That means that basically no one is selling. No one. Hey, wait a minute. I thought you said insiders are selling. Correct. The insiders are selling, but the general market are buying. Get my point? That's why the euphoric is in. I repeat, the euphoric is in because we are all-time level, really. Now, the last time when I show you this, remember, right, the market did recover, and at that time, the Dow Jones came down quite a fair bit, almost 2,000 to 3,000 points, right? Today, we are at the all-time level. So you do the maths. What would the next cost be, okay? Now, that is on top. At the bottom is the NAAIM. That is the exposure of traders. Now, the exposure of traders is at all-time record level, which means that everyone in Wall Street, all the fund managers, money managers are all in. The word is all in. Basically, any money in their kitty, they just took out and buy shares already. I mean, everybody is in stock market. Yes, that means no one believes in puts. Everybody believes in calls. And the thing is, the exposure is at all-time level. And I repeat, this is not I created this. This is from the real figures, the real data, that everyone are in the stock market. So that's why I say the optimism / euphoric is already here. The only problem is when will the fat lady sings. So I got this for you. This is very powerful. Take a picture if you have to, all right? Basically, NAAIM is a National Association of Active Investment Manager. The exposure index shows the average percentage of members' exposure, meaning exposure in the market. It's ranged between -200 to +200. Okay, to make it simple itself, right? We are at all-time high level. And the amount of cash is one of the lowest reading in history. That means every dollar and cents the investment people has, they're in stocks. So you think about this, everyone is in stock last week. Imagine that. If the stock market comes down, right, all these people, they will liquidate as fast as possible. And these people are 90% fully vested in the market. So if they were to get out immediately, Think about this. Fund managers don't get out the moment the creaks happen. They'll take it out only when the market down by 5%, 10%, and they freak out and they just press that button. So which means, guys, we are still way, way, way ahead of them. They will not press that button unless the market drop by 5% or 10%. So you don't need to worry. So when that happens itself, right, you should be way, way ahead of them in a very good position. So that's why I'm informing you guys something is going to happen soon. So watch all this indication because all of them tells you that you don't want to be on the wrong side of the market. All right, this is scary. Yes, it is very scary. So what I did for you is I did this chart for you. You call it S&P price to sales. Okay, now price to sales in short meaning the total market cap. Okay, just imagine this. Let's say this company have 100 million shares. Okay, exposed to the market, and every share is worth $1. So 100 million times $1 is 100 million divided by the total revenue. Now, if the revenue is 50 million, so it's 2.0. You understand? So the share price is way above the revenue that they churn in. Today, we are at 2.7, higher than NASDAQ time. In NASDAQ time itself, right, where it went euphoric, okay, the NASDAQ, this S&P price to sales is only at about 2.2. Today, 2.7 to 2.8. This is crazy. You know that the time, the Dow Jones, FYI, is only 10,000. The Dow Jones. The NASDAQ is only, the NASDAQ is only 5,200. Today, NASDAQ, 12,000. Today, Dow Jones, 30,000. Can you do the maths now? This is absurd, really absurd numbers, okay? So you should know that it's time to cross to the other side slowly. All right, I know that this may not be nice because if the Dow goes to 31,000 next week, you say, Kel, you're full of shit. Right, I tell you this, guys, have you ever blown a balloon before? If I blow the balloon to this size now, you may say, Kel, stop, right? Blow this size now, Kel, stop. Blow this size now, Kel, continue, blow again. Why? Because the earlier never burst. That's the problem. When we are so small, you're scared. When you get bigger, you are still scared. When you get bigger, you think that it looks good, right? Maybe this one can last a bit longer. Blow again. And that is where the loudest burst will come in. So I leave it to you to decide, but I'm definitely preparing myself on the side. So IBM planning 10,000 jobs cut in Europe. We see Disney coming down, Deutsche Bank, okay, this Hollywood themselves, my God, okay, BMO, CIMBC, all the banks, all asking us to stay at home and stuff like that. There's one counter that I may want to share this with you, and I'm not very comfortable with this counter. You heard me correctly earlier, Disney. Now, US Disney itself, right, recently, I know that they try to change their business model to help their earnings. But when I look at the chart itself, right, I'm very uncomfortable. All right, I'm very uncomfortable. So I'm going to quote it tonight just for the sake of you guys who stay under now. Disney, this counter, if the share price had to show a lot of volume, but the price had to stop there, right, be very careful. I believe that this counter, this brand may get a big hit later on. Right, I don't know why. I just saw the chart this morning. I'm not comfortable with this chart. So just in case I'm wrong, who knows, Disney may go all the way up again. Please don't quote me. You give me a disclaimer earlier. But this counter, Disney, US, this company, just be careful, right? Just be careful. Okay. Now, so now we come to the crux of tonight's session is, do we buy gold now? Well, I will just say this. Let's use the US equity market as a guide. And then you make your own decision, okay? I will not say further. You make your own decision, okay? Number one, first of all, gold dives below 1,008 on optimism for economic recovery. So what does it tell you? Oh, okay, so market is negative, then gold with what, right? Okay, remember this, huh? Now the media is telling you that because of optimism, gold comes down. So watch carefully. The moment if there's something negative, something disastrous, a calamity happen, gold will shoot through the rocket. Okay, it will shoot up very fast because the media now is basically crafting this for this purpose. Okay, they're telling you that optimism. So the point is this, then why did these people 3 days, 4 days ago call for 5,000? That is the point. That's why that day last MAO, when I told you, when I see this right in the media, I totally laugh and laugh and laugh. Put it this way, if gold can go 5,000, the writer here should be buying like crazy on that day. And yet, if this writer had bought crazy on that day, he'll be crying last few days. Okay, so guys, please, whatever you read in the media, even tonight my MAO, do your own due diligence, do your own reference. All right, you do not want to be caught by this. So of course, if you actually do me a favor, you go to Google, you put 1795 trade with the boys, and you Google all, don't need to be selective, all only. You will actually see my article there, 1795, 1795, 1795. Look at it. On October the 6th, 2020, the goal was 1890. I already said, if gold is to fall, then 1795 is very possible to be seen. This is on Google already. What more do you want me to prove to you guys? And of course, I repeated this in MAO on 12th of November, 2 weeks ago. I said that gold will go down to 1795, right? And at the time, the gold price was trading about probably 1863, around there, okay? All these are there, my friends. All these are there. You cannot run away from this, okay? So I hope that you share with your friends that trade with the boys. Really, we trade with the boys. All right. So the question is, how come I will never be on CNBC? Yeah, I realized that my life will no longer enable to go on CNBC because I cannot say things like this. That I can't say things like this also. When the gold was coming down, I called for sell, but these articles are all done much earlier and they're calling for buy. That is how I see this game. When the boys want you to buy so that they can sell, they have to go to the mainstream media to tell you some story. And this is what actually happened. So that's why I say this, probably I will never have a chance to go on CNBC in my life. Okay, now jokes aside, right? The thing is this, okay? The thing is this, they're still calling for it, right? On my birthday, in fact, 12th of August, they called that gold will go to 3.4. Oh my God. And then, wow, this son of the gun. Now, I always tell you guys, Goldman Sachs is a #1 financial player. They tell you to buy only, you watch the market. If the market really buy, follow. If they ask you to buy, the market don't follow, you better go to the other side. And you go and look for it. This is just Google. Just Google Goldman Sachs Gold. That's it. You see all these articles. 1 week ago, 22%. 2 weeks ago, bullish on gold. 1 week ago, resume. 2 weeks ago, 2003. Oh my goodness. If you were to look at Goldman Sachs and trade with Goldman Sachs the last 2 weeks, you are frightened by Goldman Sachs. Okay. That's why, guys. I don't know, guys. I'll leave it to you to decide. I'm now searching for Goldman Sachs to call for bear, that's all. The moment Goldman Sachs say the bear is in, sell gold, and gold don't move, time to buy. Got my clue here tonight? One more time. Goldman Sachs call for sell, the price don't move, it's time to buy. Okay, you don't need to ask me. You just look at Goldman Sachs, that's all. Very cool stuff. So this is my second mantra for tonight. When everybody is selling, market continue to sell, stay sell. But when everyone is selling, market stops. Consider walking to other side. That means that if everyone around you now is selling gold, which is what you're seeing right now, and the market don't go down further, it's time to walk to the other side. But if your friends are selling and gold is still coming down, stay sell. Clear? If you are clear, please key 88 into the group chat. 88. Wow, we have 212 people. We are hitting my all-time high. Oh dear. You know, the last time we have all-time high for my number, right, for my MAO was because, right, the market was actually at the peak. Yeah, the last time when my number was all-time high, the market was at the peak. So is it a sign once again? Yes. You know why? Because I'm always probably showing you hard fact and figures. I realize that whenever the market is near the peak, right, I will see a lot of people coming on board. Yeah. Okay. So that is how we derive we go back then. Okay. So let me show you some signs of what we are looking for. Number one, this is whereby when a go call for, this is where we call for buy, all right, and go went all the way up, we will correct. Then on this very day, I remember very clearly, I call for sell at 2065. At 2065, I call for sell in gold already. And after that, gold really came down. Now, every time when the boys are selling, the KSI is red in color, the market comes off. So which means that now everything is still the same. The bars are red, the KSI is red, so the boys are still selling. But undeniable, at the bottom of the screen, my KCX signal has blinked. And of course, what we are waiting for is for it to turn yellow. So at the moment now, there's no yellow bar in the chart, right? So which means that there's no reason for you to buy gold right now. If you have bought gold based on some, artificial buying, you just remember to do SWL. All right. If you say, Kel, can I just buy gold slowly downwards, right? Can I do that? My advice to you is make sure you know that if the price go lower, theoretically, you keep on buying because you're averaging. Because if not itself, you just buy a level, you just hold back first, let the market go down, then when you turn again, you buy again at the next level. Because there's many ways to do this gold trading, many ways. We won't know how low gold will go. Now, tomorrow morning, next morning, during the morning MAO, I'll release to you the numbers for the next few levels to watch out for gold. And one level that caught my attention is 1740. Yes, you heard me correct. Gold does have the potential to go down to 1740. So even you buy at 1775 recently because of whatever reason, do consider that you may have to take profit along the way down. Okay, so heard me, yeah? All right. So we are still waiting, all right? We are still waiting for the absolute good time. So I managed to remember that I brought in one guy, considered my mentor in a way, because I learned from him too, and that was Larry William. So someone asked me, Kel, was Larry William right or wrong? Let me show you this chart now. This is his chart. Now, basically, Larry William gave this gold weekly forecast using his cyclical indicator, and my God, pinpoint. Look at it. He says that on December the 22nd, there will be another drive down. December 22nd, there will be another drive down. So which means that in a month from now, he expects gold to crash down further all the way to March 21st. But a problem in this so-called prediction, because right, if you look at it carefully one more time, he's probably looking at the market supposed to bottom out soon. Then there will be a little bit recovery to the 22nd of December. So if you look at the chart right now, it seems to be actually showing through because the next few, the gradient of the line did come down, right? Though basically we should see a bottoming out soon. That means December, right, 01 to 22nd, 12, logically speaking, gold will recover a bit. Then this happened. Now, the magnitude, the point of turning point is March 2021. So that is his number. But I will say that I agree with this part here as well. I agree to this part here, but not the full part. Right. So that's not, I think Anna and you guys were asking me, right, how I see gold, right? I believe that this is what's going to be happening. Which means that we should see a temporary recovery in gold soon, all right, because of whatever reason. Then after that itself, right, when the margin call from equity market comes in, gold will likely be also sacrificed along the way. Yes. So I'm not surprised to see gold going down to 1740, 1720, or even 1680 later on. Not surprised. But once we hit a level whereby you cannot go down further. Yes, the rebound, the magnitude will be as crazy as what you see in his chart. Now, I do not agree with his timestamp, but I agree with the chart movement. So guys, there will be a lot of money to make in gold very soon. Either you buy up recently, or you sell down later, or you go all in at the back. You got my point? Ray, I don't think I have asked you guys to accumulate between 1901 to 1795. I'm pretty sure of that. Yeah. So unless you got me totally wrong itself, right? If not itself, on live with 212 people here, I like to say this with writing here. I say that sell to 1795. And then I repeat now, okay, at 1775 now, you can consider buying a little bit. Okay, consider. And then after that, the gold may come down to 1740. All right, but I do see it recovering above 2000 to 2218 by March or April 2021. Now, sometime in life, you just have to do all this thing. When people don't understand what I say, probably my bad English, all right, I'd rather print screen this right now and make sure that, right, we all have a common understanding here as well. Okay? Now, if again, Ray, if you think that I have spoken wrongly or you caught it wrongly, all right, maybe tonight with this typo here, I can run away. Good for everybody, right? So everybody, you heard me loud and clear on this. If yes, key number 888 into this group chat so that everybody is very clear tonight. Now, sometimes it's all right because of my broken English, I don't speak that well, or I'm sleeping or on my job. People don't understand. It's okay. End of the day is we know what I wrote. Google cannot lie, right? Screenshot cannot be audited. All right. The whiteboard writing was a level for you guys to consider what to do, Ray. But throughout, I really tell you guys the whiteboard, that one, don't use. Use the number that I've been sharing on MAO. Someone here itself have been pointing the whiteboard and I never once agreed to what I said back then. So maybe again, if you have been misled by people, all right, please go back to the person who tell you all this. The whiteboard numbers was not meant to accumulate. All right, it's just at a level for you to consider. All right, but throughout the MAO, over the last 3 weeks itself, I've been calling for sell. So unless you are not with me online or you are not following me, then we have an issue here. Because every day I call for sell. So people who know that I've been calling for sell on gold the last 3 weeks, please key yes on the group chat. All right, if you disagree, of course, you just put disagree. Because can't be one person versus 200 people, right? Correct. Yeah. I've been calling for sell the last 3 weeks. I have been calling for sell last 3 weeks. So how can I call for sell and then I call for buy on the other side? That is so no integrity, correct? Yeah, thank you so much, guys. I thank you so much for your common understanding here. So Ray, apology if you really got misled by someone, but I will not apologize for what I say because I know what I did been saying the last 3 weeks on MAO every single morning. Okay. All right, let's not waste time further. Thank you so much, Ray. You take care then. Okay. All right, so guys, if Larry Williams' chart do repeats, then be careful. There could be some recovery, but again, this Larry Williams chart. I will not quote his chart versus mine, but what if we happen to be coincide with each other, right? Then maybe you have a guidance here itself, okay? Now, everyone is looking at 30,000 and beyond. So you can see that Wharton professor Jeremy Single is saying that the gold market will go up. Bitcoin will go to 74,000. All right. The Ivanka Trump says that, the thing is this is very cute. Normally when Dow Jones hit 30,000 or a new milestone, right, Donald Trump will be the one that will come out, right? But this time around, her daughter came out instead. I couldn't find any tweet from Donald Trump. Only the nearest one was this one here, Donald Trump team. So it's not from him, first time. Okay. Sally, so Kel, for bear market, the KCX is not an impact. Definitely, KCX is created for bull market. And if the market go into a bad territory, all right, the KCX will have some downside. That's why I repeat, KCX is good, but it has to stay in a bull market territory. And bull market doesn't mean that the trend must be downtrend or uptrend. It's a sentiment at that moment. So at this moment now, obviously the sentiment for this gold is at a downtrend at the moment now. Hence, therefore, right, we need to focus more than one indicator other than KCX. Okay, but nonetheless, I will guide students online. I will definitely be helping everybody to follow through with gold, and we hope that we can go up all the way for gold to hit the 2000 or 2218 target together. All right, I'm committed to doing that, only for my students, of course. Okay, so the thing is now everybody says that the Dow will go higher, right? So now let's just rewind the tape a little bit. If gold price, okay, has to go up, and yet the market crash. So now the Dow Jones is at all-time high level, and all these experts are calling for buy. What do you think the Dow will be doing? That is the reason why I want you to think about this. Okay, so take a look at this one here. Remember what happened to Bitcoin recently? The crypto CEO said Bitcoin will hit 30,000 in 2020 for this reason. Wow. Okay, and then what happened? Right. People, I swapped 30,000 pounds in premium bonds for Bitcoin. Investor piled in, risk losing half of their saving. This is what always happens, right? Someone call for buy, market goes up, people will take out good money to bet on so-called speculative money, and then this happened. So look at the currency, look at Bitcoin versus our chart and the boys at the bottom. Look at how Bitcoin hit 19,500 and sold down all the way to 16,300. Now on that day, on the morning MAO last week, remember that if you're around with me, right? I said that the gold, Bitcoin will likely hit a peak, and pull back down to 16,000. If you were there, can you key Bitcoin for me? If you were there, you saw me writing that itself, right? The drawing was there. Please key Bitcoin, because that day, that morning itself, I really tell you Bitcoin will fall to 16,500. Okay, if you remember that, key in. Now, when that happened itself, right, straight away my phone never stopped ringing. My friend asked me, "How did you know the Bitcoin will come down to 16.5?" I told him up front, if I tell you I guess it, you believe me, you know? He said, "Kel, you never guess. What do you do?" I say this: when everybody is buying, market goes up, buy. But when everybody is still buying and the market don't go up, all right, and the market don't go up, it's time to walk away to the other side. That is my point. All right. So what I expect to happen on Dow Jones will be the same thing. Now watch this carefully. This is not done by me, it's someone else. This is the US dollar positioning the last few years, the last 9 years. Okay, not from me, I didn't draw this. So what happened is that you go at the bottom here, here, and here, right? So what the trajectory was, he take 2011 and 2014 trajectory and extrapolated all the way up, right? And then you realize that what he did was he used the indicator at the bottom, I believe is the currency valuation. All right, each time it goes down to about $30 billion, okay? You can see that it basically rewind and push up the dollar higher. We are now at this point here. So which means that on technical ground itself, the US dollar will likely rebound. So think about this. If the US dollar market, if the US dollar rebound, right, what will happen? So of course you may say, Kel, maybe that means that the gold will drive down lower, right? Possible. Second of all, itself, right, maybe that will drive down NASDAQ, possible. Maybe this will actually cause the market to panic and go into commodity overdrive because of inflation, possible. So there's a lot of things that may be happening, but nonetheless, we are at the extreme point. So guys, I repeat, all right, this is one way to look at it. Now, the other one look at it is this point here itself. Technical chart drawing, the scariest thing is if you're talking about 2011, 2014, and 2020, right, it's a technical point. Be careful. If this trend line breaks, this is going to be very bad. If this trend line breaks, it's going to be very bad because it's a neckline right here. And you realize this neckline, if you draw across this, there is a free fall here as well. There's a free fall. So which means that, right, I can guess as much, right, when a technical break down here, the free fall of the dollar is because Federal Reserve opened up the floodgate and let all the dollars swim in. And if that happens, it's all right, gold will shoot up very high. Okay, so this is what I'll say for tonight. Okay, this is drawn by someone else, not by me. Okay, I know it's 11 o'clock. I still got so much to go. Don't go away because this chart, I give you time now, print screen. Really, this chart, print screen. Now, this chart is probably one of the most exciting chart for tonight already. Yes, Bitcoin will go higher. Yes, and that's why I'm calling for buying Bitcoin. I told you, 19.5 sell, 16.5 buy. Now already 18,000 already. Yeah, Bitcoin is a buy. Now, this is something very interesting. Since 2013, every time when it comes to December period to November period, right, you will see a very interesting phenomenon, which means that, right, when that happens itself, the market called gold will recover. Now, is it because of seasonality pattern? Is it just by coincidence? I'll let you decide. But you can see that, right, it seems to always have happened over the last 7 years. And of course, we can see that in terms of daily sentiment, we are near the bottom also. So that's why I believe December, the early part of December, there might be some buying in gold, a little bit. Okay, so that is another chart for you for tonight. So use it wisely, use it well. I believe you can make some money out of it. Okay. All right. Then this is the one I showed you a bit earlier. The S&P 500 futures speculative positioning is already at the low level, which means a lot of people are getting out. But interestingly, normally when people are getting out, the stock market will come down, right? But this time around, you see the stock market is at all-time high. So it's very, very different from normal. This is very, very crazy stuff. And of course, the bull-bear spread is very interesting. The bull-bear spread now is at the low level, while the stock market at a high level. Now, normally this don't happen. Where got such thing? You see, normally the bull-bear spread is at the bottom. The stock market already came off. All right, it's always like that. This time around, we are at this point, but the stock market is at all-time high. So again, something is going to happen really. All right, if you believe in that. Okay. All right. So the thing is this. This is the VIX indicator. Wow, this one is even scarier. Now, whenever the VIX go above 21, the stock market already come off already. I repeat, when the VIX indicator go up, we all know, right? Every day you hear from the mainstream media, the stock market already come down. When the VIX goes up again, this thing comes down, right? But this time, the thing is up again to the high level, right? The stock market also go up. That means the boys are also getting very worried. They are hedging their bets. They are hedging their bets already. So that's why I say this, guys. The moment any punch come in the market, right, the market will sell faster than a speeding bullet. This is something that you must be careful. Total divergence. This is going to be a very good book to write, put it this way. Next time, if anybody write on divergence, this is the best ultimate divergence ever already. The ultimate divergence. Okay? All right, I think this is my final slide. And one more to go. This is very good. This slide, the one SPX 200R is the stocks that is trading above the 200-day moving average index. Very good. So you realize that every time when the stock market is near above the 200-day moving average on their own, the stock market will be near a turning point soon. So I show it again. So when this guy hit an average of 80, when about 80 to 85 range, around there, right? You will notice that when the market is above that, the stock market will turn down soon. You will notice that. Oh, you can see that. It may not be immediate. It may be about 3 to 5 days later to 2-3 weeks later, but definitely it will happen. So now where are we? Oh my God, we are now at all-time level. We are now at all-time level the last 2 years. And the stock market is still up. So tell me, what will you be doing? I'll take 2 lines, draw my support and resistance. I'll stand by already. Got my point here as well? Yes. Guys, Sometime in life, you just have to believe in history, because this is what happened back before the COVID-19 hits us. That time itself, when I share this with you, it was at 87. At time, this is where I call for it. The market came down a little bit for a few days. Then it went up again. So some people say, Kel, you are not correct. Before you know, the market crashed. So I don't know whether history will repeat, but I know one thing. Back then, the Dow Jones is 26,000. Today, we are 30,000. So I think I know what to do. Do you? Okay, now I believe this is the final economic chart. You're waiting for 4 numbers, right? Okay, the 4 numbers. Okay, haven't yet. Hey, sorry, one more. This is the standard deviation on a 3-year monthly chart. This is so powerful. Now, basically, it's that right. What it did is they did SPX large index versus the monthly SPX. And then they realized this using a very powerful standard deviation. When the standard deviation is more than 30 to 40%, the market will usually pull back to normality. So which means that, right, if the market go too far away, there will always be a pullback. So now where are we? We are at 30.1, which is again at the level usually the market will pull. So again, I repeat, with that telling you guys itself, right, it's very rare, but it's happening, and it's happening right now. So that's why next week itself, right, I'm very uncomfortable to be long in stock market. Very uncomfortable already. Maybe you can still buy for a point of actually above OP and stuff like that. But if it goes below OP, do what you need to do. That's not my point. Okay. Okay. This is the thing here. The greed index now is at 92. Okay. Anyway, you can get it from CNN Business. Yeah. Go to CNN Business. You can get this indicator. This is actually coming from the number. But do note, no, the scary part is this, my friend. Just 1 month ago, we are at 35. 1 month ago, we are 35. Suddenly, we are 92. Wow. I really wish all the best to our medical staff in the world. Hopefully, the vaccine really comes true, all right? Really. If the vaccine doesn't come out well, I tell you this is going to cave the market, all right? So last one is the US stock versus the financial condition right now. Look at it. The US stock market is at all-time high. We all know that. But do you know that the financial condition is at all-time worst? Yes, the financial condition today is at all-time worst. And this is from Bloomberg. My God. Hey, how come you don't see it, right? Exactly. It's not really given to mainstream media. I mean, their main channel. You have to go right in, pay for it, and get it. So I managed to go through Twitter and get some stuff from down there. This is really powerful. Yes, Kelsa, indeed, people are greedy, must be fearful. But do note that when people are fearful, we make sure that we also do what you do until the point the panic comes in, then you be greedy, because low can go lower, high can go higher. Remember that, Kelsa? You're my new student, so I want you to remind yourself this. Don't go crazy on that, okay? All right. My favorite movie. No, don't follow me, please. Don't follow me. If you follow me, you misunderstand, like what Ray just now misunderstood me, probably they get killed. Okay, please don't do that. Please follow the PSV system, the best of all. Okay, and trade with the boys. Okay, all right. This is the Dow weekly chart right now. You can see pretty clearly the Dow closes marginally below the moving the the trend line, just marginally below. So which means that, right, 3 weeks already, the Dow theoretically is still going up, but the upside is not as strong as what it used to be. So does it equate to what I say now? The market is buying, but everyone is buying. Sorry, everyone is buying, but the market is not going up. Yes. Everyone is buying, yes, but the market is not going up, yes. So that's why I say we are near the turning point. Just be careful on that. All right, now let's look at my number. Tonight, we know that, right, next week itself, we're going to have a lot of results coming out. We have on Monday, pending home sales, okay? It's a positive number. That's why I expect the number to be high. Then after that, on Tuesday, ISM manufacturing, the number is expecting to be slightly lower than last one. Okay, expected that was manufacturing will be hit. Then Caixin manufacturing China will be watch out. And of course, by Wednesday, ADP will be out. Now look at ADP numbers. The consensus is looking at 400,000, so looking a bit higher on the private sector. Now, crude oil inventories are looking at a positive number. This is interesting. Then on Thursday, it's initial jobless claim, about the same. But the ISM non-manufacturing itself, they also expect the same thing. Okay, so Thursday is still not so bad. But Friday, non-farm payroll, wow, non-farm payroll. Interesting, the previous number was 638,000, but this time around, they're only looking at 500,000. Now, the thing is this, the last NFP, right, the number was lower than expected. So another lower number will likely cause some panic in the market. So watch out for that itself, okay? So this means that next week will be full of market news, full of data. You really want to be online to watch the market, all right? Next week, be very careful. Okay, the long awaited number after this slide. Okay, this is the number, this is the date that I like. Now, this movie left a deep impression on me. The graphic was fantastic. This movie is this one here. All right, this is the movie that I really like. I watched this at least 6 times. Okay, all right. Other than this, Wolf of Wall Street, this movie I watched basically 6 times. All right. So why these 4 numbers? Well, if you are PSV trained, you know that we don't read the chart the conventional way. We read it from another way. So if you look at it from another way itself, right, then the number will tell you something a little bit different. So all I can say is this, today is 29 November. We are just a few days away. Just be careful, my friends. A lot of things in life is right, whether you believe it or not, sometimes it's beyond us. So traders, do your part. You're probably gonna make a lot of money if you got it right, and I wish you all the best. Okay, if you don't understand what I'm trying to say here, don't worry. Next MAO, you probably understand this better. Okay, guys, you should know what I'm trying to say. Take care on this. And let's look at the market, quick one for tonight, and then we'll close off this session. Okay, I'm so sorry tonight is so long. If you're tired, please retire, go to sleep. All right, tomorrow replay will be up again. Okay, so Dow Jones chart can see very clearly why I'm going to say this. As I mentioned to you, the market is not going up. The market went up, but it's not the type of going up that what we are supposed to see. So that's why I say if everybody is buying and the price is not going up, be careful. Okay. Now the 15-minute chart itself, you can see that the Fibonacci is hanging like a thread, so perfect. My God, look at MAO every single morning. When I put this up itself, right, it's as if the boys know where to buy, where to sell. Oh my God, this is crazy stuff. So this is the 38.2 and 23.6 level, all right? And then the weekly chart I show to you guys, so be extremely careful on this. And then the NASDAQ chart, you can see right here is the triple top, in my opinion, is still going to formulate. All right, so watch out for that, okay? The NASDAQ weekly chart, you can see the tight squeeze is squeezing in. So I mentioned to you the interesting date to watch out for. That will be August the 8th, okay? August the 8th. So a few more days, August the 8th, okay? August the 8th or August the 7th, okay? Be very careful on that day. I repeat, put here for you, 7th or 8th December. Sorry, December 2020. Sorry. I'm tired already. Okay, sorry, my bad. 7th to 8th of December 2020. This day, be very careful. All right, let's be very careful. 7th to 8th of December 2020. Sorry, I say. Because the thing put 12 August, normally read this way, but I'm more read the other way around. So apology on that. See, I'm getting tired. Shit. Okay, guys, S&P not moving much also, same thing. So I tell you guys, when everybody is buying, everybody fully vested, the market don't go up right. This is bad. This is really bad. Gold price, as I said earlier, all right, gold price may go lower. My next level could be 1750 to 1740. So be careful. Tomorrow, 8:30 a.m., be sharp. I'll tell you more on the numbers. And of course, if you are interested in Bitcoin, you can see yesterday, Saturday, when I told you guys Bitcoin will recover soon in the morning. Indeed, the KCX was there and the gold went up. So of course now Bitcoin, Ethereum are the new bull market. So the KCX will be very beautiful. See that? Will be very beautiful. So that's why gold now, you put away, concentrate on Bitcoin if you want to. When will the Bitcoin indicator be ready? It should be ready by mid of December or latest 1st of in January 2021. Okay. All right. So guys, thank you for this evening. All right. For Ripple, I don't have it yet, Eugene. Ripple, I'm not ready yet. I'm only ready with Ethereum. I show you Ethereum right now. This is Ethereum right now. Okay, Ethereum, you can see very nicely. Ethereum have a buy call right here and a buy call right here yesterday. And then Ethereum went all the way up. Then Ethereum came down this morning, color change CCRY. Ethereum went up, pull back again, KCX appear, CCRY. You see that it's working like a gem right here, right now. Okay, so guys, I'll see you tomorrow morning or next morning for our morning MAO, and that's where I'll share more stuff with you in terms of the technical level for gold and subsequent rest of them. And I hope that tonight's session you really understand me and heard me well. Right? A few more days, December will be here. Be very careful. All right, just be very, very careful. A lot of things are really surfacing. And if those things really pops up, right, maybe the next MAO, I share more with you. Okay. All right, guys, take care. Have a great night. Take good care. Bye-bye. Good night. Sorry about that. Bye-bye.